fuck going on, cuz? 30-minute time frame's back, you know what I'm saying? Alright, anyway, as I was saying, 30-minute time frame is back. Over 20% worth of winning trades in the last week alone. So some amazing price action to break down today. Let's jump into the charts and I'll go over those wins. Alright then, starting off here, we can see GN had a nice 1 to 10. EURUSD had a 1 to 8 right here. And there's a bit of a nuance with accuracy zones, so I'll go over that one. UJ had a 1 to 4. CJ had a 1 to 4 as well. GBP CAD had a couple zones that it just about missed. So this one right here was tapping around swap hours on Friday close. We were looking to take it and it would have technically ended up winning anyways. And this one right here as well, we were also looking at just about invalidate before going bullish. So a couple unfortunate ones there, but nice to see price action respecting. GJ also had a 1 to 10 and UK100 had this zone, which we didn't take. We were just waiting on this entry and ended up invalidating. But with Thailand time, for me, late New York session, I can't really trade it unless I'm going to change my routine. So I'll be looking into that. But most of the trades here were very simple. Looking at all of these, CJ itself, I put out a signal for, and there's a little bit of a story with that one. So when it comes to it, I'll go through it. And then all of these were very nice. So we'll start off here with GN. Now I'm going to go through these in replay mode. So you can see, essentially, I'll explain them how you could actually take them in live markets. So exactly what was forming, what you would look for while it was becoming a trade rather than just afterwards. So at this point here, GN trade, this is what you're looking at. Very simply, we have an untapped zone. Those are the only ones we take. When no candles will come back to the zone. You have liquidity in front of the zone with all these lows. So it's a valid liquidity supply and demand trade. Of course, liquidity has to take out its high. So if you're new to the strategy, this forms liquidity. It has to come up over the last high it created before liquidity, which right here was just these two bearish candles. So forms it, breaks above its own high. At this point right here, if it came back to the zone, it would already be valid. Now, the most important thing with these trades on the 30-minute time frame is that you're in line with the overall trend and you have clear direction to move through. So pair characteristics can play a part. GBP NZD, its pair characteristics are when it has a clear direction, it will go very quickly and very direct to that target. So you want to be getting in at those places to take advantage of high risk reward trades like this, where you don't even need to use a TP1. For the most part, NZD is, how we trade that. I swapped GBP NZD for AUD NZD just because it had slightly more wins and the GBP cross worked a bit better. So yeah, looking at this one, the overall price action, obviously what we were seeing here was we were bullish from this point in the markets. So way back here in the daily forecast. Once we took out this high, I was looking bullish. Obvious reactions off this level multiple times. And at this point, we just about dipped below the level, still didn't take out the overall lows, and we comfortably pushed to the upside again. So obviously at the time of the trade, we've taken out major highs right here. We're clearly bullish, and the initial retracement has completed. We pushed back to the upside. Now this is where it got a bit confusing for some people because we didn't take out this major high. But afterwards, we also didn't take out the major low. So when this happens, it's more important to just simply follow the last things that were happening. A lot of bullish momentum to the upside, taking out major highs. So you're always going to be looking for demands. On top of that, on a pair like GN specifically, when it has clear direction overall, when you get consolidation like this, you're looking for the break of that consolidation. So it's always good to see direct movement to our zone, which ties in with this complement because a break of the consolidation with some clear candles to the downside gives us clear movement and it gives us the breakout this area. So two things at once then come onto the trade, and now you're expecting a lot of momentum and volume to come in because that accumulation has finished. We have clear targets to the upside. So we get to the zone very simply. Obviously, as long as we don't close inside the zone, the first bullish candle will be our valid entry. This one closed bullish, you take it with the stop loss 1 pip below the lowest point in the zone, and you can just target a 1 to 10 on this one. So there it was, hit very quickly, characteristic of GM right there, and that was a fairly simple trade. But the structure right here could have been a bit questionable for some people, so that's how I break that one down. Now, pretty much everyone took this in the daily forecast. I was saying this is a trade 100% we look to take, and it tapped here at 5 PM, which for me is around 11 PM in Thailand time, and I was not really on the markets. Now, moving on to EU here, we had this 1 to 8. So this one was very nice in terms of price action. Overall, again, You can see long term we've been bullish here, but we were in the middle of a large retracement. So when we're looking at something like this, obviously these are our major levels, major lows. If we come all the way down here and we start to break below these lows, you're looking at a change of trend. But for the most part, until that happens, this is just a retracement. We're going to be looking to go bullish. Now, this doesn't actually have to happen, go bullish all the way up here. This is so far away. All that matters is we're down here right now and we have that for a target. So you can take high risk reward trades at 1 to 8 without even needing to get anywhere near that. So it's a great pace to be trading from in terms of zone positioning. Next thing to note is obviously this retracement, after we went very bullish, has ended because we've come down here, stopped taking our lows. This is our first sign. This by itself is obviously not enough. We wouldn't really be looking for demands unless there was a strong key level that we reacted off. But as soon as you get that continuation, and over here we were already looking for it because the structure was very clear. We had this key level. As soon as you react from this key level here, obviously you can see initial reactions, and we started taking off strong to the upside. We were very confident in demands. So break of the high, this second move right here, once it takes out the high, is the continuation. That's the confirmation of being bullish. So we've got that. We're looking for demands 100%. If I put it in replay mode, by this point in the markets, we had some nice demands for me. Any of these up here, I wasn't really looking for. This one, for the most part, the zone is too small for the retracement size. So what you want to be looking at is overall, how are the markets moving? You know, how big are the average retracements? We're seeing right here about 100 pips. This one right here about 100 pips. So obviously you can look at this and you can see quite clearly what would be, you know, a normal place to reach in structure. This would be okay if we were just moving cleanly. So by this point, if we had, you know, just been clean space, pushing through the markets, no consolidation, we retrace down to this level, we can take that zone for sure. But you have to look at what the markets are telling you. So if I come back here, obviously we can see that's not what happened. We didn't have clean movement from this high area. It started to consolidate. Now, whenever you see consolidation after a straight line push like this, you're going to be expecting a retracement. A retracement is not really just going to be a break here just below its own lows, especially on EU, you know, based off all the past movement as well. You're going to look for a larger retracement. Now, a couple people were waiting for this bottom zone, which is not really what you want to be doing because already by this yellow line, that's big enough. So underneath this, any of these zones you're going to be looking to get in at, especially when they're having a good reaction like this. So very simple again, first bullish close. On EU, liquidity is never really as major, so a couple candles like this is okay, considering we had a large retracement. If it was just a very short and small retracement, minor liquidity like this would not be good enough. It would definitely have to be more obvious lows. So considering we had a large retracement, that in and of itself is enough for this zone to be valid. If you think about market structure itself, you know, when you're just getting these sort of repeating movements, these have to be substantial retracements. So if it's just like this and it's not really moving, it's consolidating, this is not enough of a retracement to a zone. You're always going to see this tend to lose or have a bigger retracement. So considering the fact that just a big retracement is more than enough in and of itself for markets to go bullish, even minor liquidity is okay on a zone like this. And it's also characteristic of EU to just kind of have something in front of the zone and it's okay. So that was that one. Enter on the bullish close because you didn't close inside the zone. Target the highs for around a 1 to 7, 1 to 8. So very simple position there again. Clear direction, takes out the highs because we're bullish. Okay, moving on to UJ here. This one was a 1 to 4. Now this one definitely could have had further targets. To the left down here, a 1 to 6 would have been a very standard TP at these lows. Now, the 1 to 4 for the most part was just because we're starting to get fairly exhausted or not moving that much at this point, considering we were around this low area. Now, this is the type of place you can obviously have a bounce from, push back to the upside. So we're considering that. Let's say you're in a supply zone from somewhere up here, of course, then 1 to 10s, you know, large TPs are going to be on the table because this is the current target in the markets on this large retracement. So considering that, 1 to 4 was the most safe target and most likely what I would have taken here. But if you did take a 1 to 6, it also would have hit around these overall lows. So at the time of this trade, this one was fairly simple because all the most recent movement was just clearly taking out lows. There was nothing to even think about in terms of trend. The last thing we did was take out this low and we came to the zone with a lot of momentum. Now, when you come with this momentum, it can sometimes not be a good thing. In this case though, okay, what has even just happened? What is this? Oh, I see, somehow it's managed to paste a screenshot that I took on the chart. All I was trying to do was skip forward a couple candles. That was that was unusual. Anyway, so yeah, what I was saying was, I can't even remember what I was saying now. What was I saying before that copy paste mishap? Oh yeah, so the time of the trade, this one was very simple. We had, you know, the momentum that came back to the zone. It was after swap hours, so you could actually get in here, you know, without having too bad spreads. And a standard close entry with stop loss above the highs obviously was what you would take. So simple targets at 1 to 4 were very easy, and it played out like so. And the zone itself obviously was an accuracy zone. So for anyone new here, accuracy zone is obviously the zone is drawn on the bullish candles for supplies. Now, normally people include the entire wick like this, but that would make the zone tapped by these candles, and so it wouldn't be valid. We only trade with untapped zones. No candles have been back to them. These are the ones that hold the power, where you can just take entries like this, only cover the zone, and they always take off. So when we're looking at it like this, if any part of the bullish candle goes lower than the bearish candle after it, we only use the bottom of the body. You ignore the wick, you still obviously always draw it to the top, you only use the body. So that makes this zone untapped, and then it becomes a valid zone you can actually take. Similar over here, obviously this bullish candle, you would only use the bottom of its body, because, you know, this one came a lot lower than the bearish candle after it. So obviously this one would be tapped, so it wasn't a valid zone anyways. So yeah, that was that for a simple 1 to 4 off the close entry. Nothing complicated there, just a clean position. Very similar over here with CJ. This price action was a 1 to 4. Now this one was at 4 PM, so 1 hour earlier than the other one, which is just about within my time. So essentially I sent out the signal for this. We're looking at it to enter on this candle, 15:30. Now it comes all the way down here with loads of momentum, and at this point we're just thinking we've probably missed the whole trade and it's going to take off without us. Anyways, before the close it comes all the way back up and just closes bullish, and at that point I'm just like, okay, I'm just going to go to sleep, it's getting late, it's definitely not going to give an entry after doing all that. Afterwards it just gives a valid entry with a simple bearish close and then runs straight for 1 to 4. So yeah, a bit unfortunate for me with the timing. A lot of people obviously still took this because it just gave a standard entry, and if you're in UK time or anywhere else, this was just 4 PM, so not that late. And the targets on this one were similar to UJ. This was the low area reaching, and we saw in this case it was actually important that you just take that safe TP, because it did fully reverse afterwards for a big bullish push to the upside. Obviously when we're looking at market structure, we just about took out this high to the left by a tiny amount, but we were on a steep retracement, so we're expecting to reach these lows and, you know, this key level to the left. Now that's exactly what happened. That's where this 1 to 4 is. It may have also been in line with a normal demand right here, just for an extra factor. It was also in line with this demand zone, so there was a lot here for us to only take this at a 1 to 4, which is a very nice TP. You can see it would have played out perfectly. So it's good to see, you know, all this price action just playing out like how you would expect price action to. This is what was happening pretty much throughout the whole of 2024. Markets were just super nice to trade. So seeing this come back is looking pretty promising. And yeah, that was it. Simple TP for 1 to 4 this time. The trade right here, obviously, like I said, we had those clear targets. So it looks like a little bit of consolidation, but the price action was still clear. We were taking out lows to the downside. That's the last thing we did before coming right back to the zone. And then, like I said, it eventually gave that standard close entry, and then you could take the trade with stop loss just above the candle that's at the zone. So again, clean price action. This one had very good liquidity because there was a lot of wicks in front of the zone, taking out the lows clearly, and they all got taken out with this push to the upside, so that was good as well. Second thing for this one was obviously we were consolidating quite heavy, and this supply zone was actually the drop out of that consolidation. So always good zones when you see something like that happening, and, you know, they tend to be a little bit stronger. So that was very nice there for 1 to 4. Moving on, GC had a couple trades which came very close. So this one actually people would have taken, and even though it looks super awkward, it was possible to win on this. Now, the initial trade was right here, 4 PM, and we came down with loads of momentum. So already the fact that we just came straight off supply with a lot of momentum was, a fairly easy factor to avoid this. We stopped taking out highs clearly, and just overall trend wasn't the best. However, this is very characteristic of a GC zone. When you just get loads of liquidity building up, we were overall bullish beforehand. When you eventually break out this consolidation, take out the lows into the untapped demand zone, take out all this liquidity in one go, you're ready to go to the upside. So this was still a zone that we were looking at. Now, just this factor for the most part, was an easy way to avoid it, and I didn't take it personally. It would have needed a re-entry over here. So took the re-entry just after the initial one got stopped out. This is late Friday markets, getting in towards swap hours. The price action is rarely going to be clean, so it's expected this happens, a lot of consolidation and just awkward movement in general. Now over here you can see swap hours, so you close right here. A lot of the time for swap hours, it's up to you whether you decide to take this risk, but you can remove stop loss so that you don't get stopped out just by that small opening where the spreads can widen, or it can go below stop loss but not actually really have stopped you out. It's a risk that, is completely up to you. I don't really recommend it because there's a chance, at least on Fridays, that it could just gap downwards and then you could end up blowing your account from it. If you did remove stop loss for this, for swap hours, you wouldn't have been stopped out here. You would have just put it back on when the markets came back, and then you would have been running nicely in this position. So already around the 1 to 8 at the highs. So it was very complicated, not a straightforward position, not a clean position whatsoever, and not really one that I would have taken personally. That was that. Now moving on over here is one of the quickest 1 to 10s I've ever seen. This was on GJ. For its size, it was a 300 pip 1 to 10 and hit that quickly. So the zone itself was not the best in terms of recent market structure. However, overall structure was very good on this one. So I'll explain this right here. Essentially, we were exactly where we wanted to be for that continuation towards the upside, towards these highs over here. Now, reason for this, obviously, if you look to the left, we just taken out these major highs. All this uptrend the whole time, this would have been the target. So you're obviously going to expect a retracement after that of fairly significant size. Unless you're just hyper bullish, it might have a small retracement and then continue. The most expected and normal price action after this though is a larger retracement, which is what we saw. Obviously the trend is still overall bullish, until you start maybe coming down to these lows and then taking them out, then you can have an actual switch. But before that, this is just a retracement. You're waiting this whole time, for the reversal and the continuation to the upside to happen. So what are we actually looking for when we see this? Well, first of all, we have the initial drop to the downside, and then you start to see consolidation and uncertainty, which is a good sign for us to continue bullish because, we're not just dropping constantly after taking out those overall highs. Trend is probably going to continue in our direction. Now, after you've seen that, this is the first low, just about gets taken out, so liquidity grabbed, and then we see a straight push to the upside immediately after. And this push to the upside took out the first high, which is always what you want to see. Importantly as well, it didn't react off this supply zone because this would have been a fairly decent supply zone that you could actually trade off, because obviously it's a liquidity zone and it's untapped. It's a top zone, so not reacting off that was very important, and it's always a telling sign in price action when it was that close and it doesn't tap. So it took out a high, very bullish move, instantly corrected this drop to the downside, which was grabbing liquidity on these lows. And so at this point, you're in that position where you have that potential to now continue to the upside. You're at the major key level, which is always important. When you're on these retracements, you want to see us tapping key levels like this. So you're having a lot of reactions around here, and it's a fairly strong level. So when you retraced to that point, that by itself is not enough, but then the fact that you're seeing this reaction, you're taking out highs. When you have those two things paired together, that's when you start to look for these trades that can run for 1 to 10s. Now, the thing about this that wasn't great, that was kind of questionable, was just the fact that right around this normal supply zone, obviously we closed inside. We then had this massive drop from, I believe it was news about tariffs that came out. So not exactly scheduled news, not exactly normal price action, so you can just not really consider this at all that it didn't take out the high, because it wasn't natural. In a sense, it was just moving completely normally on a continuation, was about to take out the high and continue bullish. So opportunity can strike in a situation like this. It's dropped all the way down from unnatural news, and you essentially now have a chance to get in on this bottom demand zone, which is always a great place to trade off. This is the best price possible. It's the lowest untapped zone to take that continuation that you're already expecting from this point onwards to the upside. So you get that move. For me personally, the whole start of this year, we were getting just constantly wrecked by the Trump talking about tariffs. So, seeing it happen again it's almost going to be PTSD. I don't want to be trading after that. But a lot of people still took this anyways. And yeah, it obviously ran very quickly for a 1 to 10. And simple targets with a 1 to 10 on this. Like I said, just went over the structure. All we're expecting now after that retracement is the continuation to the upside. We've reached the key level. We've completed the retracement. We've had the momentum coming in, and everything essentially lines up at that point. Simple position, one of the quickest 1 to 10s I've ever seen. It doesn't really get much better than that, to be honest. So this final trade here is UK100 Demand. We actually had 2 demands in a row that were super unfortunate on UK100 here. Both of these we were looking to take. This one to the upside to target these highs. This one obviously to the upside to target these highs, and potentially further because we have a lot of targets to the left. So this initial one right here, very simply, it just closed inside the zone and it didn't end up being valid. It actually did respect the lowest possible untapped zone in here, which was on the 5-minute time frame, way down in this move. Right down here, came perfectly all the way to this cap fill at the 5-minute zone, and then it just took off. So it was kind of unfortunate. We expected it to happen, to be honest, but obviously not breaking the rules and just simply trading the strategy. Because if you did then just force this trade and say, yeah, because you know it's going to happen, and then it loses, well, suddenly you're someone breaking your plan. You're having, spiraling psychology and just things go badly. So even though it's unfortunate, it doesn't really matter, as long as you're just following the rules. Same kind of thing happened here. Initially, it did actually give a bullish close entry, but there was no momentum whatsoever. It simply just filled the gap up to this bullish candle and rejected. So obviously I put out the signal for this as well, and I just simply said, I'm waiting for this one because there was no momentum, etc, etc. We didn't take the entry right here, which would have been a loss on that bullish close, and then it just went and invalidated the zone, closed inside, and shot straight to the upside. So super unfortunate. What we've seen with the price action recently here, it would have been essentially 2 1 to 10s on UK100 in a row, which is definitely what we see happen on the back test. And even when we've had it as a live pair, we've hit, a couple of very nice demand trades. Is what it is. Obviously, it closing in the zone, like potentially, on UK100 you could have exceptions for, just because it's always going to be very bullish for the most part, and demands on it will just have much more power because of what it is. It's a bullish asset class, obviously, and it's technically meant to just trend to the upside forever long term. So with that in mind, you could make some type of rule specifically for UK100 about closing in the zone, if you still take it or not. And there is something there, but throughout the backtest we've seen it doesn't matter. This is just a rare occurrence that's happened now. They consistently respect the zone when it's going to win, closing the zone when it's going to lose. Long term, the rule still plays out in your favor, and so it's better to just stick to the plan, keep following the rules, how it works in backtesting. Loads of winning trades in the space of a week or so, which is amazing to see because we haven't had anything like this for a while on the 30-minute time frame. You can imagine, or if the markets were like this for most of 2024, obviously not consistently, but we'd have a week in each month here or there, every 2 months that was like this. And so you can imagine how easy it is to be profitable in the 30-minute time frame when the market conditions are normal. With the Trump stuff going on and the tariffs, the markets have been very difficult to trade across every strategy, and I've seen a lot of people just getting completely wrecked. So seeing things come back like this is a very promising sign. We're close to halfway through 2025, so it's about time. And yeah, I'm looking forward to trading the rest of the year now that we're seeing things coming back to good conditions. So that's everything for today. If you want to join the Discord, where I essentially go into detail on loads of trades, psychology, about my own trading ideas, then link in the description for that. For now though, That's everything, and I'll see you guys in the next video.